Hello, welcome to my channel, my dear friends. My name is Abhilash and I'm your trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, then please subscribe to my YouTube channel for regular market analysis, and do not forget to check out the Forex analysis playlist for the analysis of other currency pairs. So let's get started. So this is the 4 hours chart of gold USD. Yes, my favorite 4 hours time frame. When I look at the chart of gold USD after 3-4 days, I was really amazed because still there is not much movement in the chart of gold USD, and still market is trading in the range that I mentioned in the last week's video. And you can clearly see that okay, market is trading in the middle. Market touched the support level once, and after touching the support level, market recovered, and right now market is trading in the middle. Okay, so still market is trading in a narrow range. As we all know, we should follow the trend. The thumb rule is trend is our best friend, trend is our buddy, so we should follow the trend and we should not trade against the trend. And in a market condition like this, okay, whenever we see a market condition like this, then we can easily understand and see that there is no proper trend, because in a sideways market there is no trend, and in sideways market we can take trade on both the side, because see, the area of value, okay, the area of value or the best trading opportunity in an uptrend market is always near the support. Whenever a market is in uptrend, so the best buying opportunity is always available near the support. And if a market is in downtrend, okay, if a market is falling, then the best shorting opportunity is always near the resistance. But in a sideways market or in a market condition like this, where there is no proper trend, we get opportunities to trade on both the side. And if you just observe this portion of gold USD chart, then you can clearly see that there is not much movement. There is no proper trend here. Rather, market is trading in a narrow tight range. And you can see that I have already mentioned two levels here: 1794 on the upside and 1760 on the downside. So this level is the support for the market, and this level is the resistance for the market. So things are very clear. Okay, market fell 2 weeks back ago when dollar becomes very strong. After that, market is trading in a range, and right now still market is trading in a range, and we have resistance 1794 on the upside and we have 1760 on the downside. So there is a trading opportunity of 30 pips only in this range. Okay, in this range. So what should be a strategy then? The strategy is simple: buy at support and sell at resistance. The same whole theory. Okay. And right now you can see that market is trading in the middle. Okay, 11777. Okay. And if you just look at the portion carefully, then you can clearly see that okay, right now it is in the middle. So if you buy here, okay, if you buy here, then your stop loss will be here. And you can easily see that your risk to reward ratio does not match, because see, your stop loss is bigger than the take profit target. And on the other hand, okay, on the other hand, if you short the market here, okay, if you short the market here, then your stop loss will be here and this will be your take profit target. Still, the risk to reward ratio is not very beautiful. Okay, so this is not the ideal position to trade. As I always say, always try to dissect it, always try to find the area of value. And as I have clearly shown you, this is not the ideal position to buy. Yes, market has bounced from the support level, but if you have taken a position at this support level, then you are in a profit right now. Enjoy the profit, do not come out of the trade. But if you are looking for fresh opportunity or fresh buying position, then your risk to reward ratio does not match and you should not trade in the middle right now. As I always say, do not compromise with the trading discipline, and this does not support your trading discipline. So do not trade in the middle, do not chase the market, let the price come to you. So your best trading opportunity is wait for the market to come down to the support level or to the resistance level. So wait for the market to come down and hit either this level or this level. If market comes down and comes down to the support level, then just observe the price and see. If you see price bouncing back from the support level, then you'll get the confirmation that yes, 1760 is still a valid support and you can easily go for buy order. And you'll get the confirmation in the form of a hammer pattern or price rejection from below or a green candle like this. Once you get the confirmation that the support level is still a valid one, you can easily click on the buy button. On the other hand, if market goes up from here, then observe the market once it hits this resistance level. If you see price struggling near the resistance level, okay, try to read the market emotion, try to understand the market psychology. If you see that price is struggling near the resistance, then you'll get the confirmation that sellers are still sitting at this price level and they will not allow the market to go up that easily, and you can short the market at the resistance level. Okay, and you'll get the confirmation in the form of a shooting star pattern, price rejection from above, or a red candle like this. And if bulls fail to take the price to this level, then there is a possibility that market will reverse from this level only around around 1780, because you can clearly see on the chart that market is struggling in the range, and more or less bears are dominating the market. Okay, right now market is choppy, market is trading in a range, but still the dominance of the sellers are higher, slightly higher in comparison to the buyers. Okay. And if you are not comfortable with the 4-hour chart, you can also switch to the 1-hour time frame. You can also switch to the 1-hour time frame and just look at the chart. Okay. And if you want to draw another level here, then you can also draw this level and wait for the market to struggle at this level, and you can short the market. Simple, simple, simple. Okay, right now market is in the middle. Do not trade in the middle. Do not compromise with the trading discipline. Okay. And where is gold USD? Gold USD. I'm unable to find the gold USD here. Hmm. This is the sentiment meter. Okay, this sentiment meter tells us the sentiment of the retail traders mainly. Okay. So I was trying to have a look at the gold USD chart. Anyways, I cannot find it right now. And this sentiment meter is not that applicable for gold USD right now because it is trading in the middle. Okay. So anyways, this thing is not much required. Okay. Let's see how the market moves after the NFP meeting tomorrow. Okay, and um, market generally gets very volatile after the NFP report. Let's see. Till then, keep your eyes on gold USD. If you want to avoid trading on gold USD for today, you can avoid it. Okay, because things are not very green. And if you have taken position at the support level, then enjoy that. Nothing to say. So this is it. Hopefully you've understood. If you have liked the video and found the video informative, give a thumbs up and subscribe to my channel for regular market analysis. Thank you so much. All the best. Take care. See ya.